YouTube. You could be anywhere in this world, but you're right here with us. So thank you for joining us. I'm Chris. This is Dave, and thank you for joining us in another edition of Money Making Mondays. Sorry about missing last week, guys. Fortunately, we've been a bit busy, but we'll make it up with this video right here. What's up, brother?
What's going on, my man? How are you doing? How you
Good,
doing?
good, good. Life is good, brother. How about you?
Just can't complain, man. If I'm complaining, it's because I'm being ungrateful. But other than that, I can't complain. Life is really good at the moment, and I'm just I'm in a mellow place right now, so I can't complain about that. But yes, as Chris said, gents and gals, chaps and gals, we apologize for missing last week. We believe us, we did try. We really did. We were having some technical difficulties, along with some time constraints that made it very difficult for us to post a video that Monday. However, we're going to do our best to make justice for this week and this Monday on our next edition of Money Making Mondays, as we found a pretty interesting opportunity, and we just want to share that with you. We want to walk through our thought process, why that is, and why we're looking to exploit an opportunity on the pair that we are going to be discussing today. But before we begin, do us the favor of hitting that like button, that subscribe button, and notification bell button if you want to stay up to date with any and all of our most recent content that we post. We would greatly appreciate that. We really would, man. It helps us out. And if you believe that our content is helping you out, feel free to share that with another trading buddy, as it might help them out as well. Also, we're going to just go straight to the point with this video, as we no longer feel that we need to be reiterating with great extent or in detail with a lot of our concepts and principles that we teach here at the Creed, because truth be told, we've already had a couple of videos really describing what it is that we do, how we trade. We will be putting out more content in regards to that. But if you need any further training or maybe more specialization in what it is that we do, what we teach, then feel free to join our Discord. It's only $50 a month. I guarantee you it'll be well worth your investment. You won't regret it. We have a lot of our students, especially that we heard from our most recent video, that a lot of our guys are getting some positive feedback. So if you want to be part of that movement, if you want to be part of the family, consider joining us. If not, it's all good, man. No hard feelings. Chris and I will always do our best to make sure that the content that we do deliver is justice, it's high quality, and that it will help you improve your performance down the line with or without you guys joining our Discord. So anyways, let's get straight to the point, man. GBP USD, it looks like a really nice clean chart. We got a lot of the structures that we like to see. We're going to be taking a look at the 15-minute time compression. It's just a clean chart, man. Once you begin to evolve and grow as a trader, one of the things that I think is going to be very, very, very important throughout your trading career is having the ability to just pull up a goddamn clean chart, look at it, and just within seconds, and I mean within seconds, just be able to say, you know what, this looks good, I'm going to make money from it, or you know what, this doesn't look good, I'm going to move on to the next thing. When you get there, I can almost guarantee you've made your 90%. You're 90% there as a professional trader. You're literally almost there. The other things are going to be things that we have a conversation for another day, but you're literally almost there as a trader. You're in a good spot when you can just look at a chart and know instantly whether you're going to be able to make money from that or not. So GBP USD 15-minute time frame. Why does this look like a short opportunity for us? So we're going to break that down very, very quickly, and we hope that you peeps manage to gather some insights from this training. So first and foremost, let's go ahead and deploy our key levels. We got one at the 132, nice and clean right there. Boom. Let's leave that there. 133. I like that. 131. We also have a midpoint at the 135. You only want to deploy the levels that are nice and relevant to you. Leave it at that. I want that nice and dashed so we can just have that quick reference. We know what it is. You got one at the 132, 500 as well. It's looking good. There we go. That's all we need. You don't need to bombard your chart with all these fucking indicators, all these goddamn lines. stuff like that. You just need to deploy the tools that are going to be relevant for you, that are going to help you engage in your order flow analysis a lot more accurately in your technical analysis with very, very good precision, effectiveness, efficiency, precision, and accuracy, to put it simply. So with that said, we got our key levels deployed. Let's deploy our zones. I see a nice zone right here. Nice structure point. Oh, give me a second. Sorry, I apologize for that, peeps. There we are. Nice little zone right there. Make you sleep better right now. You could just kind of have those contact points nice and tight, nice and neat. Mind you, take your time with your analysis. There's no rush, man. This is how you make or lose money. You want to make sure that what you're doing is to the point, to the T, and very meticulous, because once again, this is how you make your money. You want to take your time with it. You don't want to just be risking money, breezing through an analysis if you're just going to be donating your money to the market. So I see a nice little trend line there. Which is probably the next step of our analysis, is just making sure that we got our trend lines deployed. It gives us a good indication of where traders are likely to make decisions, where they're likely to transact, and where they're likely to get manipulated, plain and simple. We see some nice trending structure to the downside as well. Mind you, you're not really gauging a bias at this point. You're just deploying your tools to give you a good indication of what's likely to happen. And then when we go through our filtering process, you'll be able to assimilate and understand where the market is likely to move with a high degree of accuracy. So we got that contact point there. The way we confirm anything is with a minimum of 1-2 contact points. We got the anchor point, which is your first contact point. 1, 2, confirmed. 1, 2, confirmed. The more, the better. That's it. You don't need to fucking confuse yourselves. Don't overcomplicate this shit, man. Plain and simple. So now we map out our liquidity. Where are traders still profitable? Well, we know they're profitable here. Breach this major key level. We talked in extensive detail about the importance of these key levels. We're not going to get into it in this video. If you want, go back to our prior videos. We cover it in extensive detail. And if you feel like we haven't covered it in further detail, leave a comment below. We'll make another video on it. We have no problem doing that. But anyways, we got liquidity here. We know sellers are profitable. We got that breach of this major key level, 1.3300. Sellers are profitable. And then this is where things start to get interesting as you get several contact points here. Not all levels are created equal. That's something that Cris and I want you peeps to understand, is that not all levels are created equal. You want to focus on the ones where they're pretty obvious levels of structure, where traders are likely to transact. And obviously, price has pulled back here several times. You got a nice little stop in here. We know sellers are profitable here. There's a pool of liquidity right around here. So some of our things that we check off on our criteria list. Like that information. Well, first things first, you need to make sure where you need to map out your major weekly highs and weekly lows. You got a major weekly low right here, major weekly high right here. This level was invalidated. There was a breach right here. You know, sellers were fucking profitable here. This is very obvious. Price was breached. We know that 80% of breakouts fail, so you don't want to trade breakouts because the majority of the time they fail. If you're a breakout trader, I know for a fact you ain't making fucking money, man, because if 80% of breakouts fail, the odds are stacked against you. Why the fuck are you trading breakouts? You need to fade strength and buy weakness in conditions such as these, and especially in volatile times. Excuse me for the technical difficulties, man. This is something that you guys are going to have to get used to. Jesus fucking Christ, man. There we go. Let me just take it slow, nice and slow. Give it a second. Bear with me.
It really does
Don't
feel
know
like the
why it
Matrix
does
now,
it.
dude.
I know, man. I don't know why it does this shit. I'm not even touching anything. It's moving on its own. Anyways, so we look to identify major weekly highs, monthly highs, major lows, etc., etc. If it was breached, all the better. So we got a breach here. 80% of the time, it's likely to fail. So we're starting to pay attention. To add more confidence to our analysis, we want to make sure how price is reacting to major levels. Well, price pulled into a major level, major swing point, trap, no follow through, as this is another part of the range. If sellers are likely to get involved here, they're going to do it here. Stop orders here, break, breach, double swipe, failure at those highs. We had it interact with another key level, break of structure. This is where things are starting to get interesting. Impulsive move. We keep checking things off our filtering process. We want to see a confirmed range at this point because it's just price behavior is so fucking typical, man. It's so predictable. When we get a confirmed range, 1-2 test at the lows, 1-2 test at the highs, we would like to see a deep excursion, but we didn't get that. So guess what? You fucking move on. Impulse move. Price pulls back, sells off a little bit, enticing more sellers. You get this nice little stop hunt here, but I'm not convinced that this is a solid one. This was kind of like a little baby one.
They're also
Sells
kind of given
off,
the chance to
pulls
take
back.
profit, Dave, in the bottom
Yeah,
right there.
no, I completely agree, man. And also in the grand scheme of things, this is also a trap. No
Yeah.
follow through. Traders were not given the opportunity to take targets at this low. Because think about it, man. If you were expecting some weakness in the pound from a fundamental standpoint, as things with the coronavirus, we're expecting another lockdown. So what does that mean? That could mean valuation or appreciation for dollar assets, safe haven currencies, because when shit is uncertain, when shit hits the fan, people are going to generally sell their assets and they're going to flock to dollar or safe haven assets because things are uncertain. So the stock market should sell off, risk on currency pairs should sell off, highly speculative assets should sell off, such as Bitcoin and things like that. Mind you, this is never financial advice. Do your own due diligence, et cetera, et cetera. We're just two guys on the internet. But at the end of the day, we put our fucking money where our mouth is. And that's, I think, what makes it all count and makes it worth your time to watch our videos. With that said, so if we already have that fundamental narrative, we have that technical narrative because we have technical criteria that gives us a good indication of where we want to be taking any type of trade in any direction. We got that break of structure. We're starting to see interactions, failure at a minor level, even at a major level, impulse move, break, pullback. We didn't get that stop hunt outside of that range or that pullback. So we continue to wait to see what kind of price action unfold. This is where things start to look interesting, man. Price pulled back again. Think about it. If you were a retail trader, if you were a seller in these type of market conditions, you would likely transact around this price level. Why? Because the more times the level is tested, the more it becomes, et cetera, et cetera. This is what you're taught in the industry. However, our edge derives from outsmarting our opponent. So if price pulled back here, sold off, this type of price behavior is a good indication that traders are going to generally risk capital out of their account in the form of selling to get involved in this type of market condition. So as price starts to pull back, they're starting to feel a little pressure. They're starting to doubt themselves. What can we expect from here on out? Well, what Cris and I would like to see from the pound dollar is that any breach outside of this, flushing out these profitable sellers, is going to be a good opportunity to take to the downside. We would like to take TP1 around the midpoint of the range. Our first target here, maybe 1.31800, maybe slightly below that, 1.31600, and then look to take it right underneath, slightly before the 1.31100 level. At that point, you want to be in, you want to be out, you don't want to hold expecting that the pound is going to continue to tank to fucking oblivion. We don't know that, man. Cris and I, we're just short-term intraday day traders. Our edge arrived when we can see a range, when we've checked off several criteria, and we can at least see certain type of structures that give us an indication that the market is either topped out or bottomed out, and we can look to exploit that. So once again, just to reiterate the concept, break of structure, impulse move, pull back, boom, impulse move, pulls back again, cleaned out these sellers. Nice little baby stop hunt, but I'm not convinced that this is it. Why? Because price pulled back again. If this was a legitimate stop hunt, this would have just fucking made targets already, but it didn't. So it's pulling back, nice clean level. It's hovering around a minor level about the 1.32500. There's liquidity up here in the form of sellers. We know that. Any breaches outside of that would be a phenomenal opportunity to begin to execute short trades. We got a TP1 there, TP2 there. At that point, we're in, we're out. I don't give a fuck what happens after that. We just want to make our money and be out so we can objectively assess if this thing is going to likely to move to the downside or appreciate to the upside. Mind you, right now, the market conditions are extremely volatile. They are extremely hectic. You don't want to be holding your trades very long. So, David, you might be asking, well, if we enter here, where do we place our stop loss? You can place it up here if you like, as we don't expect that level to be invalidated. Can it happen? Absolutely. But on the balance of probabilities, it's unlikely to happen. Or you can do what Cris and I do. We're pretty aggressive traders. We know how to manage our emotions fairly well. We would start deploying our orders or our positions outside of this range. And once we get that setup completion, then we would look to nick our stop loss. We generally, once we execute our orders, we don't place a stop loss up until we see that setup completion or until we can pick off a nice level of structure. But if you see a breach out here and you start executing your trade, consider putting your stop loss slightly above the 1.33 solid round number. That could be a good indication that beyond that point, if the market continues to move in the direction you are wrong, you want to be out, you don't want to hold the trade believing that it will go in your favor, because either way, if we are right in our analysis at this point at the 1.32500, it should see failure, sellers come into the market and continue in our anticipated direction. But that's pretty much it, peeps. That is the pound dollar on the 15-minute time compression. That's pretty much a good opportunity that we were able to identify. The structure looks good. The order flow looks good. We understand it. The chart looks good. I don't think you need to overstress it. So if you're overstressing on a chart, you probably need to move on. You need to be able to pull up a chart, look at it, and be like, you know what? I already know what to do with this. And either way, even if Cris and I take a loss on this trade, we're gonna accept that loss gracefully, because we know that it was as good as we could have taken that trade. That was the best trade we could have taken in this situation. And truthfully, it's on the balance of probabilities, man. It was a high quality trade anyways. Why are we gonna, what more could you do at that point? We did everything that we could. And at that point, you have to be graceful. You have to accept that. And you just have to be sticking to your process in the event that you take a loss. And as we just mentioned prior, if we take a loss, that's the best we could have done. Did you want to add something to that, brother?
Other than you can't be upset after you do all the required work. When you do a breakdown like this, whatever result you get is what you have to take because you did the required work.
Oh, I fucking love that, man. Absolutely right. That is phenomenally put. Once you do your work, man, that's really all there is to it. That we are in a domain of probabilistic outcomes. You can't control what the fuck happens with your trade. All you can do is just focus on your process, focus on your edge, and then just execute when you see your edge. And if there's going to be times where you win, there's going to be times where you lose, but if you have edge, you should win more than you lose, and that's really the nature of the business. But that's pretty much all that we spotted on the pound USD 15-minute time compression. From a fundamental standpoint, we do expect risk currency pairs to see a little bit of weakness for the time being before we get dollar strength. as there is talks, excuse me, I didn't mean to yawn there. As there is talks that we will hit another lockdown. If we do hit another lockdown, that's probably not going to look good for the job market. People are probably going to sell their assets. People are going to flock to the dollar, safe haven currencies. And by virtue of the fact the dollar is going to appreciate, and any assets denominated in dollars are probably going to depreciate in value as a result of that. So the pound versus the dollar is not going to look good for the pound if the dollar gets massive demand, if things continue to get worse. So this is just typical investor behavior. The more you're in tune with that, the better odds of success that you will have in the market. So I really can't think of anything else that we could cover, but this looks really good, man. This looks really good from a technical standpoint, a fundamental standpoint. Is there anything else that you would like to add to that, Cris?
I just like the idea because if we're shorting, there's liquidity available from buyers. None of them have yet to get stopped out. So I like the idea.
I love it, man.
See
Yeah,
how
it looks
they
good, man. It's a
continue
nice.
buying on the trend line.
Yes, sir. Yes, sir, man. They're going to continue buying on the trend line. Liquidity is going to build up on the underside. And if we are correct on our narrative, they should get stopped out as a result of that. Give me 1 second. We're pulling up to the daily time compression just to see if we can simulate anything. 1 second. 1 second, peeps. This is always a pain in the ass, man. I apologize for this. Got to take it nice and slow. Even on a macro time frame, you could see this, man. You could really see this. Nice little breakup structure here. Nice little high put in. Maybe we could expect a double swipe.
Wow,
We got a nice.
that looks so good on the daily.
Yeah, man. We're getting that confluence. So we can get that double swipe. Boom, pull back. Continuation to the downside. We know traders are profitable here, which is where we discussed our initial targets in here. At that point, we want to be in and out. You don't need to overcomplicate the stuff. For all we fucking know, maybe it could stop us out. Maybe we're the traders that are getting caught on the wrong side of this trade. And then all you need to do is know your edge inside and out and know why you're taking the trades that you're taking. At this point, we've conducted our analysis. This is the best it's going to get.